Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar has extended further to the downside overnight and exceeds its target of 75.2535 after additional poor news emerges from the Australian economy. After a rather lackluster current account report a couple of days ago, the Australian dollar weakness was triggered further after a surprising trade balance outcome. Net exports amounted to 105 million versus 1.4, which was about 7.5 of what the estimated was. From the reaction, the market sold off and took out the level of 75.25 and printed a low of 75.07. With the break of 75.25, I am looking for further weakness, with the MACD also confirming this to down to a target of 73.5060, with the immediate support coming in now at 74.85. Well, the dollar index has improved slightly overnight and actually is now trading to a high of 93.76, with the break of 93.55 resistance now puts further upside potential and a clearer target to 94.1015. This in turn would see the euro take out the level of 117.60 and look down towards the target of 116.90 and reassess from there. Any advances should still find resistance around the region of 118.60. Well, the dollar yen surges to the upside overnight as the yen weakens. It is viewed now from the break of 112.8085 that we are looking towards 113.60 and reassess from there. Tonight we have the awaited release of the non-farm payroll, which should take place around near midnight, I believe. The market is expecting a soft landing with a forecast holding 198,000 down from 261,000 in October. With the market likely to see a stronger US dollar continuing, should support dollar yen rally further, with the indicators also backing this view. Well, the pound regained momentum very aggressively overnight after the British Halifax HPI, which gauged 0.5%, beating the estimate of 0.2. With a host of key events tonight, along with the UK will be publishing its manufacturing PMI, could put a little bit more surge to the upside, but resistance around 135.35 I do expect to hold. Let's not forget, though, that the shaky talks still remain with the Brexit, and this could easily turn this price action completely round. But we do have an outside range day, and it's quite a strong signal, but the indicators are still a little bit mixed, so I'll be surprised if we can sustain any fresh gains. Well, looking at the weekly time frame of the gold, we've crushed all the supports this week, and the bulls have been nowhere to be seen as the market falls through, first of all, 1270, then through 1258 last night, and also took out the support of the measured move down to 1246 after printing a low of 1243. We are extremely oversold. I'm not a seller down here. I would either wait for a sharp reversal or look from the base around 36 to 42. But nevertheless, if you look at the dailies, they are also oversold. So just be a little bit aware of that. And to wrap up with oil, the market is attempting to recover after slight supply disruption fears returning. It was reported that threatened strikes in Nigeria and growing Middle East political tension stoked up fears of supply disruption. But nevertheless, we did break the uptrend at this region here of around 57.90. Therefore, I do expect to see from the break further weakness towards 56.90. I do expect to see further weakness towards 54.70. So that wraps up for today. Thank you very much for joining me, and I hope you have a wonderful start to the new weekend.